Welcome back to Commerce Geeks. Let's continue with our chapter Fundamentals of Partnership and our topic Past Adjustments or Adjustment in Closed Accounts. In last session, we started this topic and today we'll see how change in profit sharing ratio which is wrongly taken that can be rectified. Suppose A, B and C are partners, 2:2:1 is their profit sharing ratio. For the year ended 31st March 2020, partners distributed profit rupees 3 lakhs equally. Pass necessary journal entry to rectify the error. A, B and C are partners sharing profits and losses in the ratio 2:2:1. For the year ended 31st March 2020, partners distributed profits rupees 3 lakh equally. That means they have distributed profit in the wrong ratio. Correct ratio was 2:2:1, but they distributed profits equally. That is 1:1:1. Now we have to correct this error or rectify this error. Again, as discussed in previous session, we will make adjustment table and with the help of that table, we will pass adjustment entry. So how to prepare adjustment table when profit sharing ratio is wrongly taken? Adjustment table. 3 partners are there, A, B and C. Profit is to be credited in correct ratio because as we saw that profit is credited to partners capital account. Profit is given to partners, that means it is credited to partners capital account. So profit rupees 3 lakh which has been divided equally will be credited in correct ratio to partners. So profit, credit and correct ratio is 2:2:1. We will credit profit among the partners in correct ratio, that is 2:2:1. It will be 1,20,000, 1,20,000 and 60,000. This is 3 lakh profit which is distributed or credited to partners capital account in correct ratio, that is 2:2:1. We have allowed profit in correct ratio. Now the profit is distributed equally, that means this is wrong ratio. So we will debit profit in partners capital account equally. So the wrong profit which we have given, we will take it back by debiting it. Profit, debit in wrong ratio, that is 1:1:1. So amount debited will be 1 lakh to each partner. Now we will see the net effect of this and pass journal entry. Now net effect is here 20,000 credit, here also 20,000 credit and here 40,000 debit. So we will pass entry as C's capital account debit. Now adjustment entry will be C's capital account debit to A's capital account to B's capital account. C's capital account debit 40,000 to A's capital account credit, we will credit it by 20,000 and B also 20,000, and you will write narration being rectifying entry passed to redistribute the profit in correct ratio. Again I am explaining it. We have given profit in the wrong ratio equally. That means we will debit that profit because we have to take it back. We will debit it in the ratio 1:1, that is equal. We will credit the profit in correct ratio because profit is credited to partner's capital account, then we will find net effect and pass that adjustment entry with the help of this net effect. If capitals are fixed, then we will write C's current account debit 40,000 to A's current account to B's current account. But since nothing is mentioned in question, we assume that capitals are fluctuating and entry passed is through capital accounts. Is it clear? So, in previous session we did about interest on capital, interest on drawings, salary, remuneration. Interest on capital, salary and commission, they have same impact. They are credited and loss which the firm is incurring due to that is debited. Profit sharing ratio, this impact is of profit sharing ratio. Interest on drawings is debited to partners and due to that profit earned by firm is credited and net effect, through that net effect entry is passed. But there can be question in which all the errors are there and we have to rectify it. So even if all the errors are there, then also we will just pass one single entry for it. If 4 errors are there, you will not write 4 entries for that. You will simply make adjustment table which will be used to rectify the errors, and then we will pass this one single entry with the help of net effect. All the errors are rectified through one single entry only. So there may be question like that, where all the errors are there. And now this topic is over. We will continue tomorrow with a practical example of this topic where all the errors will be there. But today I will discuss the last topic also, guarantee of profits to partners. Guarantee of profits to partners, because tomorrow in the next session I will discuss adjustment, past adjustment along with guarantee of profits. We will take example of that. In the next session I will take only example to explain you the topic past adjustment along with guarantee of profits to partner. So today by concluding this, I am starting with the topic guarantee of profits to partners. Guarantee of profits to partner means that firm gives or partners give guarantee to one of the partner or maybe to 2 partners that they will get minimum amount of profit which is guaranteed to that partner. Guarantee of profits means that out of the profit earned by firm, a partner is guaranteed that he will be getting that minimum profit even if firm is in losses. That partner will get profit if he is guaranteed by other partners or firm. So, let's take an example for this. Now we are doing the topic guarantee of profits to partners. Tomorrow in next session we will do practical example of past adjustment with all the errors and one example of past adjustment along with guarantee of profits. In next session I will be doing these 2 questions with you. So both these topics will be clear to you. Now guarantee of profits. Guarantee of profits to partner. Guarantee can be given to 1 partner, 2 partner, any of the partners. Example. We will take example. A, B and C are partners sharing profits in the ratio 2:2:1. C is guaranteed that he will get profit rupees 15,000 every year. Profit for the year ended 31st March 2020 is rupees 45,000. Profit for the year ended 31st March 2020 is 25,000. Distribute the profits among the partners. We will do this topic with the help of this example. ABC are partners, 2:2:1 ratio. C is guaranteed that he will get profit rupees 15,000 every year. That means guarantee is given to C that he will get 15,000 minimum profit. If he will earn more than that, then more profit will be given to him. Total profit will be credited. But if his share of profit is less than 15,000, then he will be given profit of rupees 15,000 because guarantee is given to this partner. Profit for the year ended 31st March 2020 is 25,000. We have to distribute the profits among the partners. Now, when the profits are to be distributed, we have to prepare profit and loss appropriation account. And profits will be distributed in the ratio 2:2:1. If nothing is given in question that guarantee is given by which partner, then it is assumed that guarantee is given by remaining partners in their remaining ratio. That means A and B are giving guarantee to C in the ratio 2:2, which means equal. If it is clearly mentioned in question that guarantee is given by A or guarantee is given by B or guarantee is given by A and B in some specific ratio, then we will follow that instruction. But if nothing is given, then we will assume that guarantee is given by remaining partners in their remaining ratio. Now, how we will do it? We will prepare P&L appropriation account, profit and loss appropriation account, credit, debit. We will start with net profit. By net profit, it is given 25,000. Now this no other expenses or incomes are given, so we will directly distribute the profit. So to profit transferred to A's capital, B's capital and C's capital. Now profit is 25,000. If we distribute 25,000 in the ratio 2:2:1, then A's share will be 2:2:1 means C will be getting 5,000, A will be getting 10,000 and B also. A, B and C will get 10,000. A and B will get 10,000 as profit and C 5,000. That means when we transfer the profit according to profit sharing ratio, then A is getting 10,000, B is also getting 10,000 and C is getting 5,000. But C is guaranteed minimum profit of 15,000. So we will simply add guaranteed profit here. Add guaranteed profit, which is 15,000 minus 5, 10,000. So C's share of profit is 15,000. This 10,000 will be given by A and B in their remaining ratio, that is equal. So we will write here less given to C. 10,000 divided by 2 is 5,000. So A's share of profit is 5,000 less out of B also less given to C, it is also 5,000. So B's share of profit will also be 5,000 and C's share is 15,000, which is guaranteed to him. So this is how guarantee allowed to partner is done. Example clearly specified that if guarantee is given to that partner, then minimum share of profit is to be given to him, that is 15,000, and that profit will be given by remaining partners in the remaining ratio. Now maybe the only one partner has given guarantee, then guarantee of profits will be or can be a part of full-fledged question of profit and loss appropriation account. This is just the example which shows how we have to deal with this topic. Otherwise, it can be part of the full-fledged question and it can be along with past adjustments also. So, next session, I will discuss few examples of guarantee of profits and past adjustment, and this chapter will be over. So, if you have any doubts, you can write in comment box. If you like the video, please share, like it and subscribe the channel and refer to your friends also. Thank you. We'll see you in next topic, in next session. Thank you. Bye and take care.